Assalamu alaikum, my dear students. Today, with another past paper, accounting, paper 2, paper code is 0452 2, November 2001, and topic is Sales Journal or Sales Day Book. Question number 2. On 1st September 2001, Joseph sold goods on credit to Billy Jones. So, Joseph is the seller, and credit customer is Billy Jones. So I'm writing here credit customer is Billy Jones. Then you can see that there is a term which is called as on credit. On credit means that the goods are sold on credit where no cash or check is involved. So when cash or check is not involved and the seller is selling goods to the customer without receiving any amount, basically they just make an agreement, and the buyer, for example, can say to the seller that I will pay you this amount after 1 week or 10 days or 1 month, and both of them they agree to it. That's why we are using this term on credit. So when he is selling the goods on credit, which business document in part A, now you can see that complete the boxes below to show in Billy's books, and Billy is a credit customer, the name of the business documents, and the books of prime entry. For the books of prime entry, I am writing it here for you. Books of prime entry, which are also called as books of original entry. So number one is a cash book. Number two is a petty cash book. Number three is purchases journal, also called as purchases day book. Number four, purchases returns journal, or you can say purchase returns day book. Number five, sales journal or sales day book. Number six, sales returns journal. And number seven is journal journal. So seven books of prime entry. So in the first one, 1st September 2001, goods bought. So Billy bought the goods. So when he bought the goods, business documents, the documents which he received from the seller. So he received an invoice from the seller. There are six business documents. So I'm writing here on this side invoice, debit note, a credit note, statement of account, check and a receipt. So six business documents we need for the O level and IGCSE syllabus, and seven books of prime entry. So when Billy bought the goods on credit, he received an invoice from the seller, and he will write in his purchases journal. Purchases journal means where all the when the goods are bought on credit, so the name of the account payables are recorded there. Account payable or creditors, they are recorded. So all credit purchases are recorded in the purchases journal. Then on 10th September 2001, Billy Jones returned 200 worth of the goods as they were badly damaged. And Joseph couldn't replace the goods, so he made an allowance to Billy for their cost. So seller allowed him that yes, you can return the goods and the amount will be reduced. So when Billy returned the goods, Billy sent a debit note to the seller, and then the seller will send him a credit note for the confirmation. So as the Billy will receive the credit note, then he will write in the books. So credit note, and as he will receive the credit note, he will write this in his purchases returns journal. So the business documents section is done, and the books of prime entry section is done. Now let's go to part B. In part B, it says that on 25th September 2001, Billy paid Joseph the amount he owed. Owed means the amount which he has to pay for the above transactions, and claiming a cash discount of 2.5%. So how much did Billy pay? So Billy bought goods. So the purchases for the Billy, they are for dollar 1,000 less purchase returns for $200. So I'm writing in brackets because in accounting for the negative sign we use brackets. $800, this is the remaining amount less the cash discount, which is 2.5%. So cash discount, the seller is offering a cash discount of 2.5% if the credit customer is paying before the due date, before the time. So that is $20, which means that $780 is the amount paid by Billy. So total amount was 1,000 because he bought goods on credit. Then he returned some goods. The value is 200. Remaining amount was 800. Out of 800, he received a cash discount of 2.5%. For the buyer, this is called as discount received, and for the seller, this is called as discount allowed. And this term is called as cash discount. So the remaining amount paid by Billy is $780. Let's go to part C, And in part C, Joseph records the for the month of September 2001 included the following. Now, in the books of Joseph, who is a seller, total of sales journal. When we use the term sales journal means here all credit sales are recorded in the sales journal, and similarly, in the sales returns journal, all credit sales returns is recorded. So the total of the sales journal is posted because sales journal is a book of prime entry. So the total is posted to the credit side of the sales account. Sales we know is our income, and as per accounting rule, income is credit. And similarly, the total of the sales returns journal is posted to the sales returns is debit side of the sales returns account. Now the final part, all these parts, there are four parts in this question. There are, sorry, three parts in this question, and this is for 12 marks. Every part has 4 marks. So let's do the final part. Draw a line, put the dollar sign. So on 1st September, because now here we have to write from the seller's point of view, Joseph's ledger. So you can say that this is the Joseph's sales ledger, Joseph's account receivable ledger. So Joseph sell the goods. So on 1st September 2001, sales will be 1000. Then some of the goods are returned on 10 September. So 10/9/2001, sales returns, and sales returns is for 200. Then 25th September 2001, received amount from Billy Jones, bank debit 780, and discount allowed. The cash discount for the seller, it is discount allowed $20. So the total is 1000, and his account is closed. The seller has to receive 1000 from Billy Jones, who is a credit customer. Goods are returned by Billy Jones for 200, remaining amount was 800, and then he sent a check for 780 and received a discount of 2.5%. We can also write here cash because in the question he said that the amount owed for the above transactions. And how much did Billy pay? So he didn't say that he is paying by cash or he is paying by check. So in that case, you can say bank or you can say cash. Similarly, for this part D, if we have to do the generalizing, so I am doing it for you here. Let's say debit and credit. So my first entry will be this one for the sales one. Account receivable, also called as debtor. Account receivable. So the seller is doing recording these entries. Account receivable Billy debit 1000 and sales credit 1000. Then entry number 2, the goods are returned. So sales returns debit 200, account receivable Billy is credited by 200. And then the third transaction, when the seller received the amount, cash or bank debit. So you can say cash or you can say bank is debit by 780, offering a discount, which is a loss for the business because the business also needs this cash quickly from the credit customer to run the business, pay for the day to day expenses of the business, and account receivable Billy will be credited by 800. So you can see that in generalizing, account receivable Billy is debit. That's why I have recorded this on the debit side 1000, and the reason here is in the T count sales. Then in the second transaction, sales returns is debit and account receivable Billy is credit. So account receivable Billy is credit by 200. So I have recorded this on the credit side. And in the last entry, account receivable Billy is again credit with the full amount 800, but this amount has a discount as well because 780 is received in cash or by check, and 20,000 is the discount offered by the seller. So that's why we have recorded here 780 and $20. In this way, all these parts A, B, C, and D, they are completed. I hope you will like the video, and thank you for watching.